Hi, Michael Glennon from Glennon Capital. During the week, I had a very interesting conversation with a journalist in San Francisco who was just trying to get a bit of a picture on the Australian market and the characteristics and why certain things happened in the Australian market. And I just thought I'd give a bit of an overview on that because it became an interesting topic. And he was asking me why there were so many sort of speculative bubbles in the Australian economy. So we've had, over time we've had speculative resource booms, we've had periods of time where biotechs have run very strongly, and then we've had fintech businesses last year. And I said to him, I think that the history of that comes about because when you look at the space that we play in, that small and micro cap space, there's a very, very large concentration, especially down the very, very small end, of speculative resource stocks. And people who invest in the markets, generally everyone is an optimist and hopes that things are going to go well, and they're going to buy a business and it's going to grow well. And then there's always those, 1 in 1,000 stories of a business that starts off as a very small business and grows to a very large business. And Australia has had some very, very successful businesses that have gone from small companies to very, very large businesses. So things like Fortescue Metals, very, very large iron ore producer now, started off as a small cap company and now is a very big business. You've got CSL, which is a very small company and now is a very big business, and there's several others that litter the Australian sort of listed corporate scene, but there's not a huge amount of them. So there's all these Australian investors at that small micro cap, and there's a lot of speculation goes there, and people are always trying to find the next big thing where you buy a stock for $1 and it ends up becoming a $50 stock, similar to as I mentioned with Fortescue. So what that really does is it sets this scene where we get these big speculative bubbles, and you'll have resource companies and people investing on a promise. So we tend to stay away from resource companies. I was explaining to this journalist that I've seen hundreds of them over the years, and most of them don't amount to anything at all. Some of them do reasonably well, but generally, as soon as there's a boom in some type of commodity price, there's all of these entrepreneurs that come to market with very flashy presentations, and they say, look, we think that there's gold down there, but really they're nothing more. They've got a bit of dirt, and they'll tell you this, they'll give you some sort of diagram saying that they think that there's a massive ore body contained that no one's seen before, and that they're the first people to come across. There's been a lot of work done in Australia in terms of people going out for exploration, drilling holes and things like that, and it's all publicly available. But it's very few and far between the companies that do make significant discoveries. So we tend to stay away from it because really at that very early stage where you've got a prospector out there, it's a guy with a shovel saying, look, give me some money, I'm going to start drilling some holes, I've already done a bit of sampling, and that sampling can be as little as a guy with a bag in a remote area, picking up rock samples, sending the rock samples off for testing to see if they've got any trace elements of something in them. And then from there they'll say, look, given that we found a certain amount of rocks that we tested, we think that underneath the ground, because of what was on the surface, there might be some type of minerals or something like that that's valuable underground. So really a guy walking along picking up a few rocks for us, I know it's the start of the process, but it's not an investment grade proposition. But a lot of people in the Australian market hope to invest in one of those, and you hear stories every now and then, and someone put money in it, a tenth of a cent and end up selling for $1 and making a lot of money. Quite often those things come crashing back down to earth. It's not what we do. But I think because it's been a part of the Australian market for such a long period of time, so many of these investors, and there's a group of them, are happy to back projects like that, hoping, same as people buy lottery tickets, that one day that they'll win. And that's why I think we get bubbles in the Australian market, because everyone wants to believe that they're going to jump on board the next sort of big thing. And quite often, and we've spoken about it many times, we've seen it with lithium, we saw it with potash a couple of years ago, we've seen it with fintechs. It happens in these bubbles. And the Australian market, I think, is very prone to those things. So to be a long-term successful investor, I really think you need to say, is this a permanent shift? Is there more demand for steel? Is there more demand for coal? If there is there going to be a supply-side response, and what's going to be the long-term impact of that? So we tend to stay away from this speculative stuff. We really do think that down that bottom end, guys with shovels asking for money is really a dangerous place to invest if you want to preserve your capital. Thanks for watching. I'm Michael Glennon.